Question number 1. Identify the correct list of strategy levels undertaken by large organizations to manage their business functions. So you can see the 4 answers given, and the first answer is highlighted as the correct answer. So we are looking at the correct list of strategy levels undertaken by large organizations. So the correct answer, I think by now you have done your studying and have gone through the relevant material, and you can also see that the corporate strategy, business strategy, and functional strategy are the 3 levels. Anyway, let's look at how it is explained in the study guide. So if you go to the study guide in chapter 1, there's a table. I think this is familiar to you. In this table, it clearly says that the strategy at strategic level. So it says corporate strategy, business strategy, operational or functional strategy. So corporate strategy, business strategy, functional strategy, operational or functional strategy. So this is a really important area in terms of segregating or defining separate strategies for each of the strategic levels. So we consider in an organization strategic decisions taken at the most higher level are corporate level strategies, and that can include decisions such as major takeovers or what the organization is planning to achieve in another 5 to 10 years, and how to expand the business. So that kind of strategic decisions which are long term are we consider them in the corporate strategy category. And the business strategy is about each and every business unit of the organization. For example, the organization is having several products or several services. Each unit might be focusing on improving and developing their service in terms of the product. So every organization, if they have more than one product or service, or even if they're catering to different regions or different locations, they might divide themselves into strategic business units. So each of these units in its own will be taking their own strategy decisions to develop the business. So these are business strategies. These are not corporate strategies. These are business strategies, how to improve, capture markets, so improve on the products and services which are already offered. So business strategies is all about how decisions are taken or strategic decisions are taken in each division or strategic business unit. And then finally operational or functional strategy, when the long-term plans are prepared by the corporate strategy and are adopted at the business strategy level, and additional directions are taken, and then at the operational level or the functional level or the day-to-day level, this has to be executed, this has to be practiced. So within each business unit, long-term plans are prepared, and then this has to be practiced, this has to be executed. So there will be functional strategies as well on how to run the business. So these are the 3 things. So corporate strategy, business strategy, and functional strategy are the correct answers. Of course, in this book you will find areas about digital strategies and areas about CSR strategy, and there can be different strategies for different things, but the main, as an organization, if you look at strategies are coming under these 3 levels, and under these 3 all these additional strategies will be defined. As an example, in the corporate strategy, sometimes there will be certain aspects which are taken into consideration, which is something to do with digital strategy, but strategy levels in that sense These are the three things. Okay, let's move on to the second question. Which process in the human resource department can be improved by the introduction of IT applications? So the correct answer is highlighted as staff planning, and the other answers are cadre description, recruitment, in-person interview. So by introducing IT applications in the HR department, what is the process which can be improved? So in the HR department, preparing cadre descriptions and doing recruitment and having interviews and planning staff are given as 4 examples. So let's first have a look at on how this is explained. So this is given under still in the first chapter, impact of technology on the value chain. So in this table they are explaining different areas in the value chain or in the organization, how technology is used or how technology can add value. So if you look at the last one, the human resources management, the explanation goes as IT applications include the maintenance of a skills database and staff planning. So IT applications can help to maintain the skill database for all the employees, and also this IT software can help in planning for staff in the future requirements, right? So it will also keep information about the employees, payment data, employee insurance, pension, and other benefit calculations also is possible. So planning, staff planning is one of the key functions in the HR department, which can be value added by technology. So you can see that when you look at the 4 answers, sometimes you can think of maybe preparing a cadre description. You can use technology, but what they are looking here is that what is the process which can be improved, right? It's not like for all the processes we can use technology. Even to have in-person interview during this time, we can have the interview over a video conferencing method, right? So that we can use technology. For recruitment, to put up digital advertisements, we can use the email method to get the applications in. Yes, we can use technology in any of these steps, but if you really look at which process can be improved, then we can select the answer staff planning, right? So let's move on to the third question. The IT technology that enables a company to share information within the internal networks using internet technology and protocol. So there are several types of networks explained in the study guide. So if you really look at the question, because sometimes there can be a slight difference in the question, and then the answer will be also different based on that. So if we again look at the question clearly, it says what is the IT technology or the type of network in this question enables a company to share information, okay, enables a company to share information within the internal networks, right? So this information sharing and working happens within the internal network, so not with anyone outside the network, right? So then it's really clear. Let's go and see how it is explained here. So in the first chapter itself, different types of networks are explained. So you can see intranet here and you can see extranet here. And under extranet, there are 2 types of networks which we call intranets and supranets. So the main two categories are intranet and extranet, and under that it's further divided into intranets and supranet. So if you first look at the extranet portion, it says that this is a collaborative network which uses internet technology, okay, to join organizations. For example, to link businesses with their suppliers. So the whole extranet concept is about letting other stakeholders, other organizations, suppliers, vendors, other people who are outside the organization, to get them into working with us, so to get them into collaborating with us. So extranet, right, this has an external access, right? So the question is saying within the internal network. So we can now forget about the extranet, intranet and supranets, all three, because the whole concept of extranet is to let outside parties to work with our system. So then the only one is left is the intranet. So if you really look at, this is the network type that the question is asking. So an intranet is an internal network used to share information using internet technology and protocols, right? So I think you have seen examples of using file management, document management, management of forms, using SharePoint kind of applications. So this is the internal network where all the staff members are using on day-to-day basis, and it's not directly accessible by outside people. But even if the portion, some portion of it are accessible by outside people, in the same network, that portion is belonging to the extranet. So keep in mind that these are not separate, like totally disjoint things. This is again intranet will be there, part of the intranet will be available for outsiders as well. So that portion we call it extranet, and again based on that, depending on certain characteristics, again we will name a portion as intranet and another portion as supranet. So the answer for this we are taking as intranet, right? And according to your study guide, there's no network type called internal net, right? So this idea is internal network idea is given by the intranet. So in the textbook you have extranet and intranet. Since you have now figured out that extranet is all about getting outside people to work with the organization, intranet is the correct answer. Let's move into the fourth question. Which tool helps users to navigate the web in order to locate required websites and documents, right? So this is something that we do on day-to-day basis. Which tool helps users to navigate the web in order to locate required websites and documents? So if you really look at how this is explained, but I think everyone gets the answer really quick, because this is something that we use every time. So in this section, still in the chapter 1, when they explain internet, they're explaining what is a website, and they're saying website is a collection of web pages providing information and all that. The World Wide Web is the information or the content itself. So in the internet, what we are accessing is World Wide Web. So that's the idea. And hypertext is the technology behind all this. So it's a technology we are using. So the web pages are based on hypertext technology. So if we really look at In order to surf or navigate the web to find documents or websites, users need a web browser. So the tool expected in this question is the web browser. So the other things like hyperlinks, these are included in the web page. World Wide Web is itself all the information that you access through the internet. Networks are, we know that it's the physical method or devices and equipment that we use to access the information. So web browser is the software, so which tool helps users. This means that this is the tool that helps us to access websites and other documents. So we need a web browser to access these tools. Let's move on to the fifth question. Modern technology is driving business at present. Identify one advantage a business can drive by adopting such technology. So the four answers given, second answer is marked as the correct one. So let's look at the four answers given. Possible freezing of systems with ransomware until a sum of money is paid. That's the first given answer. Early adopters of technology can increase the market share ahead of competition. Second one. Third one. Employees feeling isolated due to lesser interaction with others. Increased threat on data security, necessitating high investments on information security system. Right. So out of these four answer points, you can see that there's three of them, A, C and D, are disadvantages. B is an advantage. Right. So anyway, let's go to the textbook, the study guide, and see how this is explained. So competitive advantage and using technology, it clearly explains how technology can benefit an organization. So it says, according to Johnson and others in 2017 in their document, highlights that for many organizations, product innovation and being the first mover may be a major source of competitive advantage. Right. So all four of these are related to using modern technology in organization. So if you look at the answer A, this is a disadvantage. Right. So if the organization is moving on to more and more technology systems, organization will have to rely on them. They have to depend on them. So when the systems are taken over by bad people, hackers, then the organizations will have to pay them money to get it released. So they will take the system into their custody and organization is in trouble. So there can be disadvantages like that. And when more and more technology is used, less physical interaction among staff members, right? Because most of the processes, interactions are done through the system. So employees who used to do interactions and work with other people face to face will not have that interaction anymore. So they will feel isolated, they will feel lonely. And more systems take over the business process. Almost all the data is now in the online system rather than in the physical traditional printed format. So whatever is in the online system, there are certain threats for data security, right? And when that is a threat, when the organization is having most of the information on the systems, they will also have to spend a lot on trying to protect the data on these systems. So the other three, yes, the other three are identified disadvantages, and the answer B is the advantage, where getting into that kind of technology early as an organization, you can get an advantage in the market itself. So if you are using new technology, you can capture the market. So you can think of a lot of examples from many industries. As soon as certain organizations they try to adopt the latest technology, they will get an upper hand in the market. So for the question 5, answer is marked as B. Question number 6. This is about blockchain. So how do we identify blockchain? So there are 4 answer points again given, and the third one, answer C, is marked as the correct one. Let's go on one by one. Ability of computers to perform tasks and make decisions without human involvement. That is not an explanation of blockchain. This is using automation and artificial intelligence. B. Dedicated space within a building used to house computer systems and associated components. Right. So this is again a physical requirement of computer systems. Public form of bookkeeping that uses an incorruptible distributed ledger using internet technologies. So that is marked as the correct answer. In a moment we will see how it is explained. The backend of the hardware application completely managed by a vendor. This is again not related to blockchain. So if we look at how this is explained, blockchain is a public form of bookkeeping that uses a digital ledger to allow individuals to share a record of transactions. Right. So when each and every transaction and the history is shared by everyone, it is very difficult to corrupt it. So this is a type of incorruptible distributed ledger that allows information to be recorded and shared with a network of individuals. So this is very transparent, therefore it's very difficult to manipulate. So this is a public form of bookkeeping which makes the use of internet technology to instantly verify and record the transactions. So transactions can be verified and recorded instantly, and it is open to everyone. Right. So public form of bookkeeping that uses an incorruptible distributed ledger using internet technologies is the correct answer. Okay. Question number 7. What is the primary requirement of an organization's information strategy? First answer is highlighted as the correct answer. Provision of the appropriate type and amount of information to the management to select, implement and control its chosen organizational strategy. B. Assurance that the strategy is developed by to bring corporate success and prevent failure. Ensure integrity, confidentiality and availability of the organization's information. Confirmation that the corporate data meets precise business standards and rules once it is entered into a system. So if we look at in this information system controls from a strategic perspective, in this section, have a read on this whole section, then you can really relate to what it says. So strategic managers need information for decision making and control, and the role of the system is to provide that information. So the underlying consideration of an information strategy is that an organization's information system should provide appropriate type and amount of information which management need to select, implement and control chosen organization strategy. Right. So this is a part of a long explanation in the second chapter, and if you completely read this by marking several key points and looking at this diagram, you can understand how different information systems and how this is controlling the organization's information strategy. So for this question, you can say that provision of the appropriate type and amount of information, right? So this is one of the primary requirements. There can be other requirements, but the most important thing is to appropriate type and appropriate amount of information to the management, right? And then management can select, implement and control its own organization strategy, right? So that's the correct answer, but it's better to have a understanding on this full chapter itself, because it's related to a lot of other aspects as well. Right. Question number 8. How iron triangle is described in project management? So if we really look at so here you can find here it says project management should be applied to when developing new products and so on, and these three key elements are mentioned. So in the question, in the answers given, all the answers are having the time, right? So one of the key things out of the three should be time. Project has to be, any project has to be completed within a given time frame, otherwise it's not going to be effective and efficient. And one of the basic needs is to have a time frame. That's why we say it's a project. And always the project has to cover its own objectives. Whatever the project wanted to do should be completed the way they wanted it by the end of the project. So we can take it as the how quality the project is, right? Whether all the objectives have been met, then project is in good quality, and then project is not good if the planned budget exceeds, right? So always a project should be targeted to complete on the planned budget and on the given time duration, and completing the project means completing the achieving the objectives which gives the quality of the project, if we achieve all the objectives as expected. Okay, so the answer is D. Question number 9. Identify 2 threats faced by an organization in digitizing the business. 2 threats faced by an organization in digitizing the business. So there are 4 answers given. Threat of customizing and improving the user experience. Threat for 24/7 customer interaction and feedback loop. Threat for rivals and arrival of new products. Threat on data security and fake news, right? So if we really look at these drawbacks, in chapter 3 it talks about drawbacks and limitations of these digitization efforts. So you can see they are talking about privacy, security, fake news, right? So things like that they are discussing. So the answer A, threat of customizing and improving the user experience, it's actually not a threat. Being able to customize and improve the user experience is a benefit which we get when digitizing a business. And also being able to have a good interaction with the customers and having a mechanism to get their feedback 24/7 all throughout the day, being able to get the customers to interact and give you feedback is again a benefit of digitizing a business, right? And threat of rivals and arrival of new products is not related to digitizing a business, because this is something where even if you don't digitize a business, any business would have this threat there, because always we can expect rivals to appear and new products which are competing with your products will appear. So that is not related to digitizing a business, but this threat is there for most organizations. And then finally, when you digitize a business, most of the or almost all the data will be uploaded or converted into an online system manner, and then you will have to worry about keeping the data secure. And then when the business goes online, you have to keep a good reputation online as well. So fake news about your business and products will be a threat to your business online. So the answer is answer D, threat on data security and fake news. Those are the two threats an organization can face when they digitize their business. Right. So let's move on to question number 10. So question number 10 is a question where you don't have to look at the textbook or try to understand the syllabus. So it's sometimes it's given as a brief explanation. Sometimes certain questions you have to figure out what does this mean just by understanding different areas in the book. So if I try to see how these things are discussed here, there are technological developments. Under this there are several technologies explained, and in this there's a little explanation on cryptocurrencies. So for this type of a question, when you are deciding the answer, you can use the knowledge overall that you have. So when we look at types of currency with your knowledge, fiat currency, commodity currency and FX currency, I think you have an understanding. So when we talk about Bitcoin and other technologies, we discussed that these are digital currencies, currencies which are maintained digitally. There's no physical presence. So an example or the only digital currency in this list is the category of cryptocurrencies, and there can be a lot of examples for different cryptocurrencies we can think of. So digital currency all digital currencies are belonging to this category, cryptocurrencies. Right. So the answer is B. Let's move on to question number 11. Strategic planning, management control and operational control are the levels of strategic information. Identify one characteristic of information produced at the management control level. So the question itself is saying there are three levels of strategic information: strategic planning level, management control level and operational control level. Let's look at how this is addressed in the study guide. So you can see in this pyramid at the top strategic planning happens, then management control happens, and then to the bottom operational control happens, right? So during the strategic planning, objectives, plans, instructions, targets are given to the management control and operational control, so that they have to follow these decisions made. And when the management and the operation control operates, information generated here, summaries, reports, and other valuable information again will be sent back to the strategic planning stage, so that they can adjust or add new objectives or update the plans accordingly. So this is the cycle. So information produced and required at each level is given in this table. So you can see strategic information, management information, and operational information, right? So strategic information is information can be either external or internal, both, right? External information, market related information, stock performance, and all the information, outside information also considered, because this is the strategic level, right? And these decisions are long term, summarized at high level. So like that, these are the attributes of strategic information. Management information is mainly generated internally, right? But sometimes there can be a little portion of, small portion of external information as well, and summarized at a lower level, not at a higher level, right? And this information is relevant to the short and the medium term, not the long term, right? And this is concerned with activities of departments, and this is about the resource usage and how the business operates. So this is management information. So if we look at the question and identify one characteristic of information produced at this level. So let's see the 4 characteristics. Both quantitative and qualitative information. Information is summarized at a lower level. Task specific information, detailed information, processing of raw data. So you can clearly see now, for example, task specific information are used at the operational level, right? So detailed, the processing of raw data also is part of the operational information. Both quantitative and qualitative information is used here. So that is part of the strategic information. So when you look at management information and the nature of it, you can see information is summarized at a lower level is the one characteristic which is relevant to management control level information. All the other characteristics are relevant to other types of information. So for question number 11, answer is B. Right. Question number 12. The following statements are made in relation to the management information system. So what are the 4? MIS pools data from internal and external sources and provides information to senior managers in an easy to use form. 2. MIS transforms data using underlying transaction processing systems into summarized files that are used as the basis for management reports. 3. MIS provides regular reports and online access to the organization's current and historical performance. Sophisticated data analysis and modeling tools is one of the feature of the MIS. Right. So in the book also, in this one, there are certain explanations on how management information systems are working on at each level. So if you look at the question, you can clearly identify that even in the previous question we discussed, management related information normally does not consider external sources, even though it considers very little amount but very specific. So MIS reports normally does not have pools of data from internal and external sources. Mostly the MIS is about internal data. So we cannot use it at this point as an answer. MIS transforms data into summarized files that are used as the basis for management reports. So the lower level, which is the TPS, transaction processing, the operational level, when the transaction happens, it stores the data in the database, and this data will be there stored over the time, and MIS can derive that data and prepare summarized reports for management decision making. So this is one of the clear statements on MIS. MIS provides regular reports and online access to the organization's current and historical performance. So exactly this is what an MIS can do. It will provide access to the organization's current and historical performance. So MIS is like a tool which always gives you reports and summarized information about what is happening at the moment, as well as over the time how things have happened. So 3 also is a part 3. The third statement is also correct. Sophisticated data analysis and modeling is one of the features. MIS does not do data modeling and analysis. Data analytics tools are doing it. So MIS is about getting summarized reports from the data which is available. It's not doing any kind of data analysis or modeling. So the marked answer is D, which is the second statement and the third statement. First statement and the fourth one is not completely correct, but if you really look at the overall system, all these features will be available in a system, but MIS functionality, the MIS tool is only focusing on the second and the third statement. This is what the MIS tool is doing. But if you really look at a software, it will have MIS capability, it will have addition support system capability, it will have the data analytics capability, everything will be there. Then we can't call that software a MIS software. It's a ERPO, it's a overall software which has all these in it. So if you are looking at the MIS feature or MIS tool, then second statement and the third statement is correct. Right. Question number 13. Which of the following correctly defines the concept of cloud computing? So I think this question was anyway discussed in the previous videos several times. So just by looking at the answers, I think we can get a clear understanding of what can be the correct answer. So let's look at the answer points. Networks that facilitate value addition to products and services by the strategic use of information. So this is not what a cloud computing is. It is not a network that facilitates such kind of a strategic use of information. Large data sets which cannot be captured, stored, managed and analyzed by typical database software. Right. So this is again this is an explanation for how big data is being analyzed. The process of collecting, organizing and analyzing big data to discover patterns or other useful information. So this is, we are discussing about data mining, data analytics areas. Use of external capacity to store high volume data. So in cloud computing, even the word we say cloud is to give the idea this is out there, this is in the cloud, this is in the sky. To give that idea, the cloud computing means this is the external feature or external facility that we are taking. So cloud computing can have a storage to store high volume of data. Cloud computing may have different applications which are in the cloud but we can use. So not only storage, all the other services and features are available in cloud computing. So if they said cloud storage here, then this is exactly correct, and since this is cloud computing, even answers like use of external capacity to run ERP applications, that is also correct, because cloud computing has external storage, external applications, external infrastructure. All of these things are available in cloud computing, right? So for question number 13, the answer, we can take it as answer B. Let's look at question number 14. What are the characteristics of big data? So 4 answers are given. First answer says significance, accuracy, large, internal, consistency. Second one says timeliness, accurate, transparent, tactical, and transformational. Third one, which is marked as the correct answer, says volume, velocity, variety, veracity, and value. I think you remember even in the previous sessions we did, we had this question, and these are the 5 characteristics of big data. And in D it's saying relevance, reliability, readiness, rapidity, and resilience. So let me show you the area where this is discussed in your study guide. So this is in chapter 4, under what is big data, an explanation is given, and then you can see characteristics of big data. So we say this is characterized under 5 V's: volume, velocity, variety, veracity, and value. So volume is all about the sheer amount of data itself. So that's why one reason we call it big data. The amount of data being accumulated and the amount of data is available is a large amount, and the bigger the data, the more potential insight it can give us. So we say it has a large volume of data. Then velocity, this is how fast in a speedy manner the data is being flown in to the organization, and because this is being accumulated very fast also, we have to consider on processing it as well. So data is coming at a high velocity, so lot of data frequently coming in. So because of that, it accumulates and build up a large volume, and data is coming in very fast. So this is the how data is coming in at a very high speed. And then variety, because big data, when we look at the constitution of big data, it includes different types of data, and it has different themes of data, or it has data which is belonging to different aspects, and data can be coming from more than one source. So as an example, if the data is collected from social media, so there can be data which is collected from Facebook, which is collected from Twitter, and which is maybe content like photographs, video postings, people's comments on it, and different types of data also will be available. So big data, even though we are saying it has a large volume and it accumulates and data generates and we receive it in a higher speed, and it also has this characteristic where data is a combination of different types of variety of different data. Alright, so the answer for this question, I think this is a very familiar question. So the marked answer is volume, velocity, variety, veracity, and value. So since the data has a large volume and it accumulates very fast and we receive the data quickly, and it has a variety of data, a veracity of data, then data itself becomes valuable because we can use it for a lot of decision making because of these characteristics. So therefore these are the 5 characteristics of big data. Question number 15. Okay, a scenario is given. Mr. Pereira, a sales manager, is really concerned about the sales performance. He needs to analyze sales data in detail, starting from the sales for the entire company to sales for an individual sales representative. Right. It says, which of the following is the suitable reporting mechanism for Mr. Pereira to look at detailed data about sales. So he needs to analyze sales data starting from the entire company in a higher level and down to sales of an individual sales representative. So this itself gives us an idea from a higher level perspective and diving into a detailed individualistic perspective, right? So then you can relate this to a drill down aspect where we can drill down into the smallest bit of data which is creating the final outcome. So there are other options also given: executive dashboard, exemption reports, data analysis. So let's look at how this is explained in your study guide. So if you look at there are certain areas explained in chapter 4. You can see reporting is available, and it's talking about dashboards and mainly executive dashboards, and it gives you a higher level detail on the performance of the organization or the business unit. And then it talks about drill down reports, it talks about exception reports, and different types of presentation of the reports. So if you look at the drill down reports, this is to provide users with the capability to look at increasingly detailed data. So this is what the question is asking, from the higher level of data starting from the sales of the entire company. So higher level picture, and from there to drill down to an individual salesperson figure. Up to that should be able to drill down. So it says increasingly detailed data about a situation. For example, a sales manager could first look at the data for a higher level such as the entire organization, and then drill down to a more detailed level such as the individual department, or as given in the question, individual sales representatives performance. So then can be drilled down to a very detailed level up to individual figures as well. So you can see the answer suitable for this one is a drill down report, which allows this ability to start from a higher level of higher picture and then move into more specific detailed analysis. So the answer is answer B. Question number 16. Which of the following is the correct statement in relation to OLAP? Online Analytical Processing, OLAP. So let's look at how this is explained in the textbook. So this is explained under data warehousing and improved reporting capabilities in chapter 4 itself. So it says here that reporting and query tools used within the warehouse need to be flexible enough to allow multidimensional data analysis, also known as online analytical processing. So these tools are used in data warehousing to do multidimensional data analysis, right? So each aspect of information, which can be product, region, price, budget, sales, and things like that, represent a different dimension. So this OLAP can be used to analyze the data in the data warehouse from any of these dimensions to see what kind of patterns can be emerged. So this enables data to be viewed from each dimension, allowing each aspect to be viewed in relation to the other aspects. So we can find the relationships and outcomes of these different aspects. So example, information about a particular product sold in a particular region during a given time period would be available online. So we can see into different scenarios how these can be used for decision making. So if we look at the 4 answers, the first answer is highlighted as the correct answer. The reporting and query tools used within the warehouse need to be flexible enough to allow multidimensional data analysis. So this is what we looked at now, and let's look at the other answers as well. A software looks for hidden patterns and relationships in large pools of data. OLAP used to increase the speed and accuracy of transporting materials and products around a product system. A connected network of everyday objects communicating directly online and the sending and receiving data over the internet. So this is mainly an explanation on the Internet of Things, so which is not relevant here. And this is not looking at hidden patterns. This is doing data analytics, or analyzing the data based on different dimensions, not necessarily looking at hidden patterns, right? So you can't use these data analysis tools to speed up the process itself, because this doesn't have anything to do with the process. But maybe when you use this data, maybe you can take decisions which can affect these processes and to improve them, but not the tool itself cannot use to increase the speed and accuracy of these processes. So the first one highlighted is the correct answer, right? Question number 17. Strategic enterprise management systems focus primarily on strategic management with a view to allowing organizations to improve their business processes, procedures, and their business decision making. Which of the following is the component of SAP Strategic Enterprise Management System? So let's look at how this is explained in the study book. So in the example given, it's explained the SAP Strategic Enterprise Management System based on a document published in 2017. So it has several components in it: business planning and simulation, corporate performance monitoring, business consolidation, business information collection, stakeholder relationship management. So these components are the strategic enterprise management system components and specific to the SAP software. So if we really look at the components of a SAP strategic management system, the 4 answers given: controlling and management accounting, master data management, stakeholder relationship management, operational management. So you can see in the 5 components, the strategic 5 components are stakeholder relationship, business information collection, business consolidation, corporate performance monitoring, and business planning. So all are related to strategic actions. And the other options other than the answer C, which is the correct answer, other options are not the strategic options or components. These are operational or management components. So these are also available, but not in the strategic enterprise management system, right? In the ERP, master data management, operational management is available, and controlling and management accounting is also available. Strategic enterprise management is all about having the strategy in place for the organization and using SAP to do that, and that is different. So these are the 5 components. So the answer C is the correct answer. Question number 18. A grouping or higher level structure used in the manufacturing process consisting of several individual materials or components is identified as. So this is again a bit familiar explanation. We'll see how this is explained in the textbook. So this is explained here in the bill of material section. Is a grouping or higher level structure used in the manufacturing process and consists of several individual materials or components. So this is basically the raw materials, the components, the assemblies, sub-assemblies, and that form the finished product. So manufacturers will have a separate bill of exchange for each product produced. So bill of material is all about a list of all these components and materials which are required. So in the question, it's clearly is asking for manufacturing process consisting of several individual materials, so defined as. So this grouping is the bill of material. And enterprise resource planning is a system where we used in the organization to plan all the resources. Materials requirement planning is again a process that we do. Manufacturing resource planning is also a process. This is the only kind of a structure or the thing that we have which has this kind of arrangement. So bill of material is the answer for this question. Question number 19. This diagram below shows the division of responsibilities in a planning, control, and feedback system. So there are 5 stages. Plans are made, control decisions, control actions are put into effect, results are measured, and then finally reports on actual results are compiled and feedback given. So some of these steps are performed by accountants and some of them are performed by the management. So let's look at in your study guide. This is in chapter 5, the ERP chapter. You can find this section under variance reports, performance reports. So if you look at here, it explains activities 1, 2, 3, and some of the activity 4 will be done by line managers. So line managers will make the plans, line managers will have the control decisions in place. Then based on those decision, control actions are put into effect, are done by line managers, and some of the results are also measured by the line managers. But the last 2 activities mainly having the reports with the actual results and the feedback will be done by the management accountant. So the main role of the management accountant in this situation is to provide feedback. So in budgeting, the management accountant in the role of budget controller may be required to coordinate and consolidate the plans of various departments into a single master budget. So the comparison of actual results with plan is a task that is begun by the management accountant, activity 5, but completed by the line manager, activity 2. So this is a set of activities which are happening throughout. So you can see the arrows are given in a such a way that based on the activities which are happening. So if you look at the question here, which of the following activities are the responsibility of the management accountant? So the same diagram is given to you. So activity 4 and 5, the results are measured and feedback provided is the responsibility of the accountant, and activity 1, 2, 3 and even a little bit of the activity 4 is done by the line managers themselves. Right. Let's move to question number 20. Human resource planning concerns the acquisition, utilization, improvement and return of an enterprise human resources. What is the correct process of human resource planning? So let's look at how this is exampled at the textbook. So you can see in chapter 5, the same ERP chapter, the process of human resource planning. So you can see there's a diagram which is having processes mentioned. First one is strategic analysis, second one is forecasting, job analysis, and then finally recruitment and training. So these are the 4 processes of human resource planning. So you can see the correct process for human resource planning as strategic analysis, forecasting, job analysis, recruitment and training. So question number B, answer B is the correct answer, which is marked here. Let's move on to question number 21. Again a ERP question. An ERP system is an enterprise resource planning system. ERPs are software systems designed to support and automate the business process. However, there are some disadvantages with ERPs. Which of the following is considered as a disadvantage of the ERPs? So to understand this, let's look at both the advantages and disadvantages in the system. So in chapter 5, in the 6th section, there is a list of advantages and there is a list of explanation of some of the disadvantages. So let's first look at the advantages to get this understood clearly. One of the advantages is each component is similar in its visual characteristics. So this helps with the initial configuration of the system and training users in multiple areas of the system, because the system, the look and feel of the system is similar. Visual characteristics are similar, so it becomes easy to configure it and to train the users. Another advantage is the data is stored as a single source of truth, which is maintaining data centrally. So in a central place, single copy of the data is maintained. So because of that, it helps for different types of compliance, especially like complying with foreign countries. As an example, GDPR, which has a legal requirement, and you can easily have data quality reporting, easy to do the maintenance on the data, remove garbage, because it does not have different places in a single place, stored properly, and easy to resolve errors. And all the business processes can flow from start to end without any problem because of an ERP system, because this all the processes and data are at the same place. Reporting also can be integrated, and which reporting can be generated on the real-time basis. And business intelligence related tools also will be available because of this arrangement. And ERP systems is easily integrated with other third-party systems which the organization is already using. So with any ERP system, most of the other systems that we use can be easily configured to work together. Now let's look at the disadvantages. Disadvantages include the high cost and the time taken for implementation, the lack of scope for adaptation to the demands of the specific business, because this ERP software is catering to a large number of organizations, and it is not directly and specifically catering to the organization you are working. So sometimes certain things will be a bit difficult for you to adopt into your organization, because this product is a generic product which supports most of the organizations which are out there. And in addition, a problem with one function can affect all the other functions, right? Because this is all linked together, sharing the same data source. So something goes wrong in one section will affect other sections as well. So there are some problems as well. So if we look at what are the disadvantages here, if I start from the below, similar visual characteristic, okay, we saw that it's an advantage, because if the system is familiar and all the departments will have a similar look and feel interface, then it's easy to train users into this system. Error resolution is actually, we saw that it's an advantage because the data is at a single place, so we can find the errors easily and fix it. Single source of truth is the centralized data storage concept, which a sub benefit of which the error resolution is a sub benefit. So B, C and D all are advantages. Now let's look at the first answer, connected processes and data. Because the processes and data is connected with all the departments and all the functions, something wrong in one section, one process, one department will affect most of the other departments. So that is a bit of disadvantage in ERP systems. So question number 21, answer is A, connected processes and data. Question number 22, cost schedules are lists of expenses incurred by manufacturing units in production. Which of the following decisions can be assisted by cost schedules? So let's look at how this is explained. So in again chapter 5, there's a section cost schedules. So there's an explanation on what type of cost schedules are available and what they do, and then there are 4 types of decisions given which can help, cost schedules can help to take these decisions. So the 4 decisions are mentioned here is the break-even decision, how many products to make in order to cover the cost. Key factor analysis decisions, such as whether to produce products in-house or outsource them. Pricing decisions, how much to sell the products in order to maximize profits. And investment appraisals, whether new equipment should be purchased or to use old equipment, or things like that. So these decisions will be supported with cost schedules. So if you look at the 4 answers, raising finance, key factor analysis, inventory ordering level, controlling financial resources, the only correct one is key factor analysis, which is the second answer. Let's move into question number 23. The following statements are made in relation to the e-business and e-commerce. First one, e-commerce means the use of electronic techniques including the internet to buy and sell products and services. Okay. E-business is just one aspect of e-commerce. E-business includes only online marketing and sales. Online ordering, payment and delivery of intangible goods and services are considered as aspects of e-commerce. So I think we found similar questions in the previous mock paper as well. So if we look at how this is explained, so in chapter 6, the chapter is about e-commerce. It says e-commerce is the use of electronic techniques including the internet to buy and sell products and services. And it also says e-business is the use of electronic techniques including the internet to transform key business. So the difference here is e-business includes e-commerce in it. So when a business becomes an e-business, e-commerce is one of the things that the e-business has, right? So online payments and selling, we can consider it as e-commerce. And in e-business, along with those two, other aspects also, other processes are also included. So e-commerce can be a subset of e-business, right, among other things, right? So there are even the textbooks is saying this can be confused with each other. So there are e-commerce is just one aspect of e-business, right? So e-commerce has several aspects: electronic ordering of goods and services, online ordering, payment and delivery of intangible goods. So now we can see the question is asking for e-business as e-commerce related statements, and the first statement, e-commerce means the use of electronic techniques. Yes, this statement is correct. E-business is just one aspect of e-commerce. No, it should be the other way around. E-commerce is one aspect of e-business. E-business includes only online marketing and sales. No, as you saw, online payments, online buying, everything is included in e-business, so that is wrong. Online ordering, payment and delivery of intangible goods, yes, that is also correct. So 1 and 4 is correct, so therefore answer A is correct. Question number 24. In order to implement a successful e-commerce strategy, organizations may need to recognize or reorganize their processes to make best use of the technology which supports the e-commerce system. What are the stages followed when introducing e-business in an organization? So this is again a common question that I think we have discussed earlier also. So these are the 4 stages when an organization is going through this transformation to becoming an e-business completely. So there are 4 stages mentioned here. First one is organization can start by having a web presence, can open up a website, put the product details, brochures, things like that, and even let the potential customers and existing customers contact the organization via the website. So contact us forms or complaints page or things like that. So having a web presence is the first stage. Then the second stage is including a basic e-commerce capability which can be used by the suppliers and the customers to make payments online. So that is basic e-commerce. And then that e-commerce can be expanded into integrated e-commerce, where when the payments are made, certain other processes and activities are also linked, which is like delivering of goods or automatically ordering of raw materials and things like that. So those processes are also linked with this platform. Then not fully, but some of the processes are now automated and online they can do it. And then finally, almost all the business processes are converted or digitalized, and electronic technology has become the fundamental technology for this organization in performing their operations. So those are the 4 steps. So if you look at the answers given, web presence, basic e-commerce, integrated e-commerce, and e-business are the steps when introducing an organization to become a e-business. Question number 25. When a company is considering whether to develop its e-commerce business, it should consider value creation by the model it plans to use. So there are several models to create value under business to consumer e-commerce platforms. So this question is asking what is the meaning of merchant model. So there are many models. This is asking what is the meaning of the merchant model for e-commerce. So if you look at the different models available, so this is again in chapter 6. So the advertising model is there, which the organization obtains revenue by doing advertising. Intermediary model, right? So the organization acts as an intermediary and collect data about customers, consumers, and price comparison. So that kind of features, if the organization is given, they are earning money because of providing and using information. And the merchant model, companies can directly sell items to customers online. So that's the merchant model. Manufacturer model, where manufacturer itself directly sells the customer without using a retailing intermediary. But a merchant is next step of this manufacturer model, where directly sells to the customer, but maybe manufacturer can be a different organization. Subscription model is about getting the users to subscribe for maybe valuable content or services for a monthly fee. So that's another different model. So if you look at the answers given, consumers pay for access to a website that usually contains high value content. So this is subscription type. A manufacturer who sells its product to customer through its website rather than using a retailing intermediary. So this is a manufacturer model. The business collects data regarding customers and their purchasing habits and sells to other businesses. So this is the intermediary. And the correct answer is companies use the internet to sell their goods and services to customers who are able to order on them item and they pay for them. Let's move on to question number 26. E-procurement is a term for purchasing goods by businesses using electronic means. So e-procurement is the procurement processes that we have in organizations, but these processes are executed using digital online methods. So procurement happens online, right? So these are the benefits of e-procurement, except now this question is asking you to find one of the answers which are not a benefit, right? And most of the other answers, the other three answers, are benefits. So the word except means not a benefit. These are the benefits of e-procurement except this given answer. So let's look at the study guide. So we are in chapter 6, Introduction to E-Business, and in chapter 6 e-procurement is described in under 4.1. so you can see, if you look at what is e-procurement, it's the same procurement process, but this is done online using electronic methods, right? So when we are talking about e-procurement, we also talk about electronic data interchange, and this happens between suppliers and the purchasing organization. So there are different models. Now you can see in the question the 4 answers given. Wider choice of supplier is available, reduced purchasing agent overheads is available, and increased inventory levels. Okay, that is a question. Improved manufacturing cycle. So from the outset you can just see that answer C is not suitable here, because this is something which we know that if we have proper procurement, we don't have to keep higher inventory levels, because keeping a lot of inventory is again a cost and a burden to an organization. So just about enough amount of inventory if we can manage, that is the best option, rather than keeping a lot of inventory. So e-procurement helps to maintain low inventory levels, because this process is digitized. So answer is C, but let's look at how these things are explained. So there are different models given. The public web model, this is what the individual buyers and suppliers meet in a website where which is open to anyone. So this is not specific organizational arrangement or anything. There are websites like marketplaces where buyers and sellers can meet, and they can do the transaction. So in a public web type of a model, there's no relationship between structurally there's no relationship between the buyer and the supplier. Anyone can buy from anyone, and any seller can sell to any buyer. So this is a open marketplace. And there's another type of model we can think, is that the exchange model, right? So this model is a little bit from more into private side of the public web, where the suppliers and the buyers use a different third-party marketplace, but still there's no relationship between the supplier and the buyers, but it's a third-party marketplace. It's not a publicly available marketplace, but a third party, some other organization is running a marketplace, so buyers and sellers can have their dealings there, but they still do not have relationship with each other. And then the supplier centric model, this supplier, if the supplier is a big supplier who can supply items to a lot of buyers, then the supplier itself will manage or will maintain a marketplace where different buyers can sign up and log in, and then negotiate and buy. So supplier is maintaining the portal so that buyers can log in and buy. And then the other way around, buyer centric. So individual companies are having contracts with different suppliers, like which is the most common way of buyer supplier relationship. So the catalog and ordering system are then maintained in the buying organizations, not the supplier. Then this is integrated. Now individual organizations have this purchasing, procurement, this buying in their system integrated, so that the suppliers can register and deliver or get the orders for that. But this supplier and the buyers have a relationship in this situation. And business to business marketplace, again an independent third party. This has to be pre-agreed, and people who have relationship with each other only can register. So business to business marketplace, this is not open, but number of buying and supplying organizations have agreements so that they can buy on this platform, right? So all the buyers and sellers have pre-agreed contracts and agreements. So this is how it works. And then if you look at e-procurement websites are there. So this is operated by the supplier. So from that website, buyers can buy and discuss and negotiate the prices and all that. So if you look at benefits of e-procurement, there are 5 benefits given here. One of the benefits is cost reduction. So there will be exponential reduction of the cost, because this whole process of procurement, all the stages are captured in the online platform. So the process will be very efficient. It will not have delays in between on the approval process, on giving quotations and all that. Everything will be monitored carefully and responded immediately, so that the process will be very efficient, right? And this will reduce overhead for both of the buyer and the seller, and this overall can become reduced cost for the whole procurement process. And then reduce inventory levels, right? So since this whole thing, the procurement of items required is online, the existing inventory levels and the speed of which the stocks are being consumed, everything can be checked in the system, right? There's nothing to be done on the manual side. So at any given time, product numbers, the prices, everything is available in the system. So there is no need to keep extra inventory or to be prepared for that, because at any given time the organization can find out what is needed, and the suppliers will also can find out when this organization would be needing these supplies, so that they can also plan ahead. So this helps the buying organizations to have a inventory level which is just enough for their operation, nothing more. So this will help reduce inventory, and because of this online system, all the aspects are clearly transferable, and this can be controlled very easily, because everything is online. And wider choice of suppliers, because when these e-procurement systems are available, many suppliers can approach the buyer, or these many suppliers can meet with the buyer, and then that will also help to have lower prices, because there are many suppliers to select from. And improved manufacturing cycles. So when the procurement is efficient and it happens according to the planned schedule, manufacturing cycles will be improved, and it will improve dramatically, because increased efficiency and speed can also put the rest of the supply chain, if it's not done on time, if the procurement is delayed, then the whole manufacturing process get delayed. So on the other hand, if the procurement is done on time as planned, it will help the manufacturing process to finish on time, so that this whole process will be efficient. So if we look at the question here, now out of these 4, increase inventory level is the total opposite of what happens with the e-procurement system. So reduce inventory levels is the benefit that you are getting from a e-procurement system. So the answer is C. Question number 27. Commentators highlight so-called mega trends which, coupled with the internet, are changing the face of the business. So there are, in time to time, in different time periods, there are mega trends, like trends which are used by organizations and the world. So these mega trends are highlighted from time to time. So let's look at what these mega trends are for. So this is basically a result of internet. So if we see how this is explained, yes, in chapter 6 itself, the internet in context. So there are several points mentioned here. Let's have a brief look at it. So new distribution channels revolutionizing sales and brand management. In this respect, we can suggest that e-commerce may be increasing the rivalry. So these are different mega trend factors explained in the book. The continued shift of power towards the customer. For example, the ability to compare prices directly. So because of this e-business, internet based buying and selling happens, consumers now have a lot of options to check the prices and compare products and buy. So now the power is more with the customer, which was earlier with the seller, because when the customer doesn't have many options and ability to compare, sellers can keep a margin and customers will lose in that. So shift of power towards customers. So customers now mainly influencing this situation. Growing competition in the region, internationally and globally. The internet remove some of the barriers to entry to an industry. So for example, if you want to start up a small business, maybe a business which you are planning to run from home, let's say preparing cake or something from home, and try to find a market for that and deliver for people who wants it. So without internet, this would have been very limited, and you should be in an area where the people in that area are interested in buying your product, and then people to get to know the details of the product and to give you the order and all that will be difficult. But with this e-business type of a concept, if you are opening it up for customers to give you the orders and check your products online, then you will have the ability to have the competition with other players as well. So and therefore you will not need to have a physical shop also. So therefore your overheads also will be low. You will not have to pay a rent and all that, because you are running your business completely online. An acceleration in the pace of business, and linked to this an increased automation of business transaction and workflows. So we discussed this earlier also. Because of use of technology and online methods, business also will grow faster and it will develop faster. Transformation of companies into extended enterprises, so involving virtual teams of business, customers and supplier. So all the parties related to the business, from the customers to suppliers to staff members, now they can be from different geographical areas than where you are running the business. Even your staff members might be working from maybe a different country, maybe your suppliers are from a different country, maybe even your customers, you can be serving customers worldwide. So this helps an organization to transfer from a company into an extended enterprise. And reduced importance of location, because when you are doing business online, location actually does not matter, because there are certain businesses even in Sri Lanka, you don't find a physical office or a building where they operate, and they only operate through internet, and you have phone numbers and email addresses to contact them. But in terms of having a physical office, some of the businesses they do not have. and re-evaluation of how companies, their partners and competitors add value. So this will have to be done because now the context have changed. You are not running your business in the area, and you are not running it in a local manner. This is open to other people as well. Then so you have to evaluate how you do everything in your business. And finally, the recognition of knowledge as a strategic asset, because not only the organization processes and all that, the product and the building and the previous setup, knowledge also now has become an important asset, because when you are doing business online, having the required knowledge on the right time will be a decision factor to see whether your business improves or not. Right. So if you look at the question, there are 4 items given. Reduce importance of location. Yes, we saw that how it was explained. Decreased automation of business transaction and workflows. The opposite of this is happening. Decreased the bargaining power of customers. No, the customers are having more power than before. Decreased rivalry between competitors in industry. This is also happening in the other way around, because of e-business concept, most organizations can compete. They have more opportunities to do their business. So because of that, there will be increased competitiveness. So the correct answer is reduced importance of the location, because you don't have to worry about the location anymore, because the business can be completely operated online. Okay, let's move on to question number 28. The environment can act as a trigger for change in organizations. Which of the following is considered as an indirect trigger? So there are direct triggers and indirect triggers. Let's look at what are the direct and indirect triggers. Right, so we have indirect triggers and direct triggers. First we'll look at the direct triggers. So arrival of new entrants into the market, mergers, acquisitions, and between existing competitors in the industry. So for an organization, it can be a direct trigger or influence if a new player, a new organization entering into your same market. So it will be a direct trigger to you as an organization. Or when other organizations join and some other organizations buy several organizations, then it will create a new competitor for you. So it's a direct trigger. Changes in level or intensity of competition. So some organization who did not compete aggressively with this organization earlier, but now have started competing aggressively. They are investing now, they are trying to expand the business, so that will become a direct trigger. So having new organizations starting up, or organizations joining together, or even organizations who were not that competitive earlier, but now they are trying to be competitive. So that is also considered as a direct triggers. And then if there are changes in the supply chain, the where you get your materials and service and all that, the way you distribute your product or services. So if that change due to some reason, due to the country situation, due to the economic situation, then this directly trigger your organization. Now let's look at what are the indirect triggers. So changes in the economic cycle. If, for example, if even now in the country organizations are having a trouble because they don't have the same market that they had earlier, people are very careful on their buying habits, and so because of that situation, the market structure is now changing. So changes in the economic cycle as an overall is an indirect trigger. So because of that, you will have to do certain changes. And second one, new laws or changes in customer expectations and taste. So this is again a direct trigger, because if customers have now evolved and changed, and their requirements have changed now, they want something different, they want something improved, or they want something basic, and you are trying to sell something complex. So if these changes happen little by little, it will affect, so it will be a indirect change. Changes in product or process technology. So if you are using certain technology, let's say if you are having a business which has vehicles to be rented, and then suddenly the metering method, new technology is introduced, and then because of that you will have to do certain changes. You have to buy some equipment to all your vehicles, and so something like that. So the technology which are used by the rest of the industry also will be a reason for you to adopt into that. So it's an indirect trigger. Changes in communications media, and in particular growth of e-business and e-commerce. So when the organization starts using different type of online media and social media, that also will be a indirect trigger to this organization, because if you don't adopt into that also, you may not keep up with the competition. So these are the indirect triggers. So if you look at the question, answers given: changes in supply chain or distribution networks, right? Changes in the economic cycle, arrival of new entrants into the market, changes in the level of intensity of the competition. So if we consider the indirect triggers, the indirect trigger here is changes in the economic cycle. Right. Question number 29. The creation of a new intermediary by an established company in order to compete via e-business with established intermediaries. So introducing a new intermediary by an established company. So established companies have intermediaries. Intermediaries are other organizations who are between the end user, end customer, and the organization. So it's like the agent, the distributor, the retail seller. So like that there are, so one organization might be producing the item, and there will be one organization who is distributing it to a given area. In that area, one organization will be doing bulk sales, and when another organization will buy bulk from that organization and do retail sales. So intermediaries are organization in middle who will be part of this process. So the question is asking what type of intermediation is this. So if we again look at creating a new intermediary in order to compete via e-business with established intermediaries. So there are intermediaries, traditional intermediaries already, but using e-business, the established company creates a new intermediary so that they can compete. So if we look at how this is explained in the textbook. So e-marketplace types, functions and features. So first example, first they have said is about disintermediation. So disintermediation means removing the intermediary organization and directly selling it to the customer. So the organization who produce it directly sells to the customer without having an intermediate organization to sell it. So the value chain is given here. So you can see in terms of having an author trying to publish the book and sell it to a customer. This is the traditional method. So author writes the book, give it to a publisher, publisher prints it and give it to wholesalers, and wholesalers will give it to many retailers, and customer has to walk into one of the retailers to buy the book, and customer cannot buy it from anywhere else. But this can also be changed by introducing another type of intermediary, another retailer, where this retailer directly buys from a publisher and customer can buy from the retailer. And sometimes publisher itself in their website can sell the book directly to the customer, and even author can start their own e-commerce platform. They can sell the book directly to the customer. So re-intermediation is this is establishing new intermediary roles, right? So when in the previous situation, when some intermediaries were removed, you need a new intermediate person or organization with a different operation mechanism. So when the disintermediation was done, new intermediary organization has to be introduced. Countermediation means in the existing method there are intermediaries. As an example, airline ticketing, there are ticketing agents, so they are working on the same traditional way. You can go to them and buy tickets, and on the same time organization, the airline itself is having direct sales with the customer. So that means keeping the existing intermediation and creating a new type of mediation with customer. So this is counter mediation. So the answer is C. Question number 30. The model of Rao 2003 suggests the stages of e-commerce development and their characteristics. Select an answer with the correct order of 4 stages of e-commerce. So there are different e-commerce stages given. So let's look at how this is explained. So here several stage models have been proposed for assessing maturity of capability. Such models can also be used as a guide to future development. So model of Rao 2003, this was suggested in 2003, the stages of e-commerce development and some of their characteristics. So if you can see this table, stage 1 is having a presence online, so content window to the web, no integration, email or nothing. So there's no integration, but there will be email and it will be a website basically having information about the products and the organization, just to be present on the online platform. Then this can be improved into a portal, right, where profiles can be created, two-way communication, order placing ability is there, but still payments cannot be done, but you can do the booking, you can place the orders, and then outside of the portal you can do the payments when you go there, but booking can be done. So two-way communication is possible. Customers, they can contact the organization, they can give their comments, complaints and all that. So this website can become a portal with this functionality. So that's the stage 2. Stage 3, the portal is now improved to handle transactions, and the transactions means the whole marketplace concept, auctions, financial transactions is possible. So this transaction type of capability can be added to portals. So that is stage 3. Stage 4, integrate most of the features or processes in the organization into this website. Not only the payments, but also the customer relationship management, supply chain, everything is fully integrated. So almost all the process in the business is integrated into the online platform. So we call it company integration. So if we look at the 30th question, the correct order is given in here. First the presence, and then can be a portal, and then it can have transaction ability, and then the whole company processes can be integrated. So question number 30, answer D is the correct answer. Let's move into question number 31. Web-based communities are enhanced by. So there are several examples. Let's look at what is explained in the study guide. So this is explained under the features of Web 2.0. So when we are talking about internet and development in web technology, we talk about Web 1.0, which was many years back, and then Web 2.0. So this is basically the different technologies which was introduced, and Web 2.0 is not a new concept. This is about maybe more than 10-15 years old concept, and with Web 2.0 only all these features start coming in. Before that, websites were, if you remember, about 10-15 years ago, when we think about a website of an organization, it was just a online booklet or online advertisement. So mainly you had some information in the website, and that's it. You can't do anything with that. So web-based communities are enhanced in the Web 2.0 concept. Is we talk about social networking was introduced, blogs was introduced, the concept of wikis, I think you know Wikipedia, so that concept was introduced, and instant messaging was introduced. So all these were introduced in when the Web 2.0 concept came, but this is not something which came recently, many years back, but because of this only these technologies were introduced. So web-based communities are enhanced by these abilities. So these are social networking ability, being able to have blogs in websites. Wikis are like people co-create content, and instant messaging info, exchanging information instantly. So you can see the 4 enhancements given, right? So the main idea is these communities, what they mean is that internet users can participate in the experience compared to in Web 1.0. We are just observing, we can just look at it and come, but now we can interact with it, we can comment on it, we can like it, we can share it, we can tweet on it, so we can chat with the organization on the web page. So users can engage and participate. So that's Web 2.0. So answer for 31 is answer A. Let's move on to question number 32. Companies that optimize the customer decision journey by compressing, or in some cases eliminating, the consideration and evaluation phases will assert competitive advantage. Which of the following is the correct process of accelerated loyalty journey? So this question is about how digital customers are profiled. Now I'm in the 7th chapter in the study guide, and how digital customers are profiled and customer loyalty cycle is being understood, right? So if you can see, there's an introduction here. Number of new online companies have been started, and these are run by young entrepreneurs, and they are more concerned in using technology in their business strategy. So these organizations are helping other organizations to profile customers based on the digital behavior that they have. So you can see classic customer loyalty cycle: consider, and then evaluate and bond at the same time, and then buy the product, and experience the product, and then advocate. Accelerated loyalty journey, starting in the same stage: consider the product, evaluate the product, and straight away buy the product. And then when you buy the product, experiencing the product, and then become advocate, and after that bond with the organization. So this is the accelerated loyalty journey, and you can see there are explanations given and descriptions given also. So as given in the question, consider, evaluate, buy, then experience, and then advocate, and finally bond. So answer C is the correct answer for question number 32. Next question, 33. Creating value through the supply chain can be achieved in the following ways except. So again, there are three options which are creating the value through supply chain, and there is one way which is not creating value, right? So three of these answers are creating value through supply chain, and one is not. So let's look at how this is explained. So under the chapter 8, e-business applications, technology application in supply chain management, elements of supply chain management is explained. So organization has control over these four parts in the supply chain. For example, relationship with the suppliers, interface with suppliers, which is inward logistics and stores management, relationship with the customers, and the interface between the customers, where warehouse management and outward logistics is handled. And creating value in supply chain, value is created in these are the following ways which you can use to create values: cutting costs, persuading customers to pay a higher price for products, selling more products, selling a more profitable mix of products. So this is how value can be created in a supply chain scenario. So creating value through supply chain can be achieved by the four ways given below. Responsiveness, the ability to a computer to supply their customers quickly. So company can be very responsive in supplying to their customers because of the supply chain management. Being reliable, because in a timely manner, quality supply and in the right quantity has to be supplied. And then thirdly, having a good relationship, this has to be established, and to have a strong relationship, to have trust and mutual understanding with the suppliers and the customers. So this also is one of the ways. And the fourth one, management of efficiency in logistic operations, because it all matters where in a given time frame to be able to expedite all these actions. So management can also create value by improving the efficiency of stores and warehouse operations so that supply chain works in a smooth manner. So if you look at the answer points, responsiveness, reliability and relationships are actually part of how we create value through the supply chain, and recognition is not included in this. So this is the answer for this question, because this is not part of the ways which are value creating in the supply chain. So responsiveness, reliability and relationships are creating the value, but the question is asking which is not creating value. So recognition, we can mark it as the answer. Question number 34. What is the meaning of electronic data interchange, EDI? So this question we can look at how this is explained. So if you see, various applications of IT can be used to improve the supply chain process. So this is mainly to reduce the cost and improve efficiency. So you can see different applications are listed. So let's see a bit of each of these applications. Internet can be used. So this can be used as a method of connecting with suppliers, products, placing the orders. So internet helps to reduce cost and improve efficiency because you can connect with these parties. Intranet, this is very useful within the organization, where you can link the internal systems and let all the internal processes work seamlessly in the system. So an intranet also is contributing to this efficiency. And then electronic data interchange, which is the one is asking in the question. So electronic data interchange, EDI, is another way in which companies can communicate electronically with suppliers or customers. So this is the way the company communicates with these stakeholders. So having internet and having the intranet and having this ability in these systems is also one method where improving efficiency and saving the cost can be achieved. So the purpose is to maybe to placing orders and maybe to pay for those orders. So electronic data interchange is what happens in this online system. So internet provides the connectivity, internet provides the platform, and this is the feature which we use to use in these systems. And also RFID, radio frequency identification devices, this technology also can be used in this kind of scenarios, especially for logistical purposes where all the items, the flow of the items, and we can control and we can have idea how the process is happening. So if we also can use this technology in our logistics in the organization. So if we go back to the question, EDI is explained. So let's read all four answers. EDI is a transfer of structured data by agreed message standards from one computer system to another without human intervention. Okay. EDI is an automated method for identification of objects such as goods in transit. So this is about the radio frequency identification devices. So this is automatic identification of items in the supply chain. So that one we can exclude. EDI is a general term for purchase of supplies through the internet or the information networking systems. This is again we can remove from the as one of the answer list. EDI is an approach to manufacturing that seeks to eliminate all activities that do not add value. So this is which is a different concept. This is the concept of lean manufacturing, so we can exclude that as well. So first one is transferring of structured data among the other parties using electronic systems. So this is another way which companies can communicate electronically. So this is what is explained here. So question number 34, the answer is answer A, first one. Question number 35. Lean manufacturing is an approach to manufacturing that seeks to eliminate all activities that do not add value, such as waste and holding inventory. So having a lot of waste in the manufacturing process is also not adding value, and holding too much of inventory also is not adding value. Actually, it's increasing the cost. So the following statements are made in relation to lean manufacturing, and the question is asking which ones are correct. So let's read the four statements. One aim of lean manufacturing is to minimize the amount of resources, including time, used in the manufacturing operations. Lean manufacturing is a push system. Lean manufacturing may also be associated with aspects of total quality management. It involves identifying and eliminating all non-value adding activities. Right. So let's look at how this is explained in the book. So if we move into the section which discusses about lean manufacturing, so this is in chapter 8, technology application in operation management, lean manufacturing, total quality management, and BPR, business process reengineering. So if you look at lean manufacturing, this is an approach to manufacturing that seeks to eliminate all activities that do not add value, such as waste and holding inventory. So the aim of this is to increase value by doing all these measures and taking all these measures and activities, and minimize the amount of resources. Even the time taken for this is to be minimized, used in manufacturing operations, right? And it involves identifying and eliminating all non-value adding activities, right? So there are several explanations. Now you can also see this is to eliminate waste and to improve product flow and quality, instead of devoting resources to planning future manufacturing requirements and building up inventories in anticipation of demand. So as in a push system, so lean manufacturing is a pull system. We do not expect the manufacturing process to keep enough stock, thinking that there will be a requirement in future to manufacture more products, but rather this is a pull system. As and when the requirement is there, having the inventories coordinated carefully. So it focuses on reducing the response time so that the production system is able to put orders quickly when it's received, and change the manufacturing process or prepare the manufacturing process rapidly when the demand increases, and whenever the customer requirements are changed or added, meeting them is faster. So when we look at the points given here, except for the second point, which says it's a push system, which is not, it's a pull system, all the other three are correct in terms of lean manufacturing. So the answer will be B, which says 1, 3 and 4. So 1, 3 and 4 are correct, yes. So the answer is B. Question number 36. Zero defects and get it right the first time are two concepts in total quality management. So who has developed these concepts? Let's see what are the concepts developed here. So question number 36. Right, so question number 36, there's Edward Demings. These are the ideas that he is giving, and Philip Cosby in total quality management. These are the two concepts that he gave. So zero defects, get it right the first time, So this is the answer. So Philip Crosby is the person who introduced or who suggested to have this in total quality management, and also Joseph Juran, he also has suggested this concept, identify the opportunities, fitness for use, so things like that. And then again, feature of total quality management also falls under the Kaizen method, which is originated in Japan. So that is also explained. So there are different views here, so it's better to study all of them, because you may get questions from the other methods as well. So for this question, Philip Crosby is the one who introduced the concept zero defects and get it right the first time. So Philip Crosby is the answer. Question number 37. There are a variety of ways e-payment methods can be used. Which of the following is the method that individual companies have contracts with a number of different suppliers? Question number 37 is discussing about these contracts. So let's move to different types of these contracts. So the answer points given are exchange, supply centric, buyer centric, and public web, right? Individual companies have contracts with a number of different suppliers. So each company will have contracts with different suppliers. So individual company will buy from different suppliers. So these are buyers who are buying from several suppliers who are having contracts. So we'll see the given methods. Public web method is to find individual suppliers on the web marketplace, and there's no relationship between the suppliers and the buyer. You can openly find suppliers for what you want to buy. Exchange. Exchange means suppliers and buyers trade through a third party open marketplace. So this marketplace is a dedicated third party marketplace, but again they are dealing with each other, but there's no relationship between the supplier and the buyer, right? It's a third party marketplace. It's not public, but it's a third party marketplace. Then comes the supplier centric, right? Each supplier gives access to organizations who wants to buy, which is already pre-negotiated product arrangement with the price and all that. So supplier will have relationships with other buyers. So supplier will give access to the organizations to buy them online. So therefore the supplier has contractual agreements, relationships with the buyers who are registered. Buyer centric is the other way around. Buyers have contracts with different suppliers. Any organization to buy supplies from different suppliers can have contracts with different suppliers, and buyer can maintain the catalog and the ordering system so that the suppliers can use that to supply products here. And business to business marketplace, this is again independent third party agreements with the number of buying and supplying organization, right? So buyers and suppliers again deal with each other in a marketplace, but not like the other methods. Everyone is bound by agreements in the marketplace, right? So the answer is for the question, it's buyer centric, where companies have contracts with a number of different suppliers, right? So individual companies have contracts with different suppliers, so that is buyer centric. Question number 38. Service marketing is an extension of the original marketing mix. So let's look at how the marketing is described here. So the original marketing mix is product, price, place and promotion, which we call the 4 P's. This is about concentrating on the product, what is the demand, and what is the features of the product, what is the requirement, and then what is the pricing strategy, what others are in the market pricing this, and so those kind of decisions, and the place, how to distribute this, where to make this product available, right, distribution channels and all that, how to reach the customer. So place. And promotions are how much has to be spent, how is the advertising done, so all that. And that was then extended with another 3 categories, because these were considering the products marketing, but it was not considering the services. So then when a service is provided to a customer, people also is a really important thing, because services are given by the staff members to the customers. So the conduct of the staff members, their attitude and the way they talk with the customers, so all that matters if it's a service, because that is also part of the service, how you contact your organization and work with the staff members. And then physical evidence, because if it's a service, you need some kind of physical evidence as a customer to have a good experience and to have a good look and feel. So physical evidence is also important. And then for services, since it's not a tangible product, services will need to have a proper process, how the service will be delivered, and then customers will be able to understand what they are going to get. So these are the 3 things: people, physical evidence, and process. So people, process, and physical evidence. So this is answer is number C. Question number 39. How product is defined by service marketing mix. So let's look at how this is explained. So in chapter 9, marketing practices in digital platform, the product is explained like this. The product is the service provided to the customer and the features of the service. So in service marketing, when we say the product, this is the service which is provided to the customer, and whatever the features in that service that the customer can experience, that is also part of the product. So these services can be having different types, and there are variations. So these variations are also explained here. So for example, the services provided to clients by accountants are very different from the provision of mobile phone services by telecommunication companies. So both are services, but by nature the type of service also can be different from situation to situation. So therefore services can be less comparable. It's difficult to compare services, and we can't take one measurement for all the services than the tangible products, because tangible products we can have a comparison, and organizations can offer different features as part of the service they offer. So maybe a similar type of organizations might have different levels of service. So it is the role of the marketing to make clear to the customer what features are included and what are the benefits this brings to the customer, because there is no set standard even among the same type of service between different companies. So that can also change. So the question is asking in the service marketing mix how product is defined, because service marketing, the product, there is no tangible product, there is an intangible experience. So a service provided to the customer and the features of the service are considered as the product in service marketing. And the other answers, service cost incurred by the customer it's the cost, service supply form as well as the from where the customer receives it, that is also not the answer. Logos and other visible evidence of the brand identity, and definitely that's not also related to this. So in a service marketing mix, when we consider the product is itself the service and the features of the service. So A is the correct answer for question number 39. Question number 40. A displaced outpatient complained to the hospital customer care officer about a 2-hour delay for the doctor to attend to the channel session. She explained about the unexpected situation that caused the delay and persuaded him to wait for the doctor. Which element of the marketing mix correctly describes the involvement of customer handling officer to convene the patient? So in the marketing mix, there are 7 P's which are mentioned, and out of the 7 P's, 4 of them are given here: process, place, people, and physical evidence. So if we look at how this is explained, so in the people factor, the greater amount of customer contact in the delivery of a product or service, the more crucial is the role of people in the organization. So when it's come to services, organization staff members are the ones who are mostly contacting the customer, and most of the time customer's service will be also based on how these staff members behave and conduct. So here people refer to the staff and the salespeople who work for the company, because they are the ones who are interacting with the customer. So many cases delivery of a service and the physical presence of the staff involved are inseparable, because service, again, services are obtained from the staff members by customers. So this is why the term people was specifically added to service marketing, because people, staff members are very important when giving a service. So in that case, people issues in marketing may include these things. For example, how the staff members appear, their attitude on dealing with the customer, how do they behave, whether they are knowledgeable, whether they are professionally suitable, and whether they have the commitment to deliver that service, and whether they have the integrity and ethical approach. So all that is can be considered as the people related factors. So if you look at the set of answers here, definitely when a person complains, the customer complains to the customer care officer, and what element of the marketing mix correctly described? So definitely the people element is describing how staff members should be delivering and how they should conduct so that the customers are satisfied. So for question number 40, answer is C. Question number 41. Private Banks of Sri Lanka continuously encourages customers to use automated teller machines for their banking transactions such as cash withdrawals and deposits. Which element of the marketing mix is involved here to resolve a customer requirement? So there are 4 answers given: product, people, process, and promotion. So banks are asking and encouraging customers to use the teller machines for their withdrawals and deposits. So this is they are talking about a certain aspect of their product or service. So let's look at how this is explained. So in the textbook it says within the marketing mix, process is concerned with the systems and processes of the organization, right? So this is what we see here in the question. This is about a process. This is not about how staff members of the bank interact with the customer. This is not about the product itself. This is not about introducing a new type of account or credit card or payment facility. This is about how a certain process is conducted. So and this is not anything related to a promotion by the bank. So process element is involved here because this customer requirement is concerned with the process of what is happening here. So the answer is answer C. Question number 42. Customer attraction is critical for a business entity to be successful and profitable. Which of the following e-marketing tools can the company use? So there are several tools: above the line marketing, search engine optimization, out of home advertising, and print media. So which are the following e-marketing tools can the company use to attract customers? Okay, so let's look at how this is discussed here. So leveraging the results of search engines, under that you can clearly find out that these technological things, for example acquisition of customers through the e-business technology, so search engine optimization. So this is mostly, sometimes you might confuse this with other approaches as well, but this is more into how to do the marketing on a digital platform. So one of the ways is that when you do search engine optimization, when someone searches for a related thing, the organization's web page also appears in the search results, so that customers, potential customers, they tend to click on these links. So if an organization can use search engine optimization to bring their organization and the products and all that in the first page itself in the search results, they have more chance of attracting more customers, because customers will tend to see these products and services listed. So a company can attract customers by more customers by doing search engine optimization. So as this is mentioning e-marketing tools, so this is the e-marketing tool available in the answer. But other marketing tools also, for example using print media for advertisements, can attract customers, but it's not a e-marketing tool. So out of all the marketing tools here, the only e-marketing tool is search engine optimization. Let's move on to question number 43. E-tailing or electronic retailing, sale of goods and services via internet, is becoming the latest trend in the society. However, there are risks involved in business model. Identify the risks of conducting e-tailing. So e-tailing means electronic retailing. So there are 4 things mentioned here: potential for rapid growth in sales, easy access to marketplace, customer intelligence for improved competitive edge. So all these 3 are actually the benefits, right? These are not risks, these are good things. Last one, possible hacking of customer information. So let's look at how this is discussed here as well. So here the restrictions and limitations of e-tailing for the customer is explained. So you can see this is in chapter 9. So you can see these are the limitations and risks. So for example, customer security and data can be compromised if the organization is hacked. So when most of the information is online and organization is digitized, and then there is always this risk of the data and the other information will be hacked by someone else. So there are many examples that organizations also have lost personal data and credit card information and things like that. People have stole it because it's available to be hacked. So, and there are other limitations and difficulties as well because of the certain regulations and data privacy restrictions. Now, for example, if you are working with customers in UK, or if you are working with suppliers in UK, then there will be additional rules and regulations. For example, GDPR might be applied. So there are certain limitations and risks as well, and one of the main things can be there is a risk, there is a vulnerability that when the information is online or in the server, there can be attacks, and hackers may hack the information and they will take it out. So possible hacking of customer information is one of the risks when retailing is conducted online. Right. Question number 44. The 6 I's of marketing explains how internet can add customer value to improve the organization's marketing effectiveness. Select the correct characteristic that is a part of 6I model. So if we look at what are the 6I characteristics. So this was developed by McDonald and Wilson in 2011, and these are the ways which the internet can add customer value and improve the organization's marketing effectiveness. So these are the 6 I's of e-marketing: interactivity, intelligence, individualization, integration, industry structure, independence of location. So all these 6 I's are explained. It's good that if you can read this and have idea. So among the 6 I's, what is given in the answer, only integration is available, and other options are not part of the 6 I's model. So the correct answer is B, integration. Question number 45. What is the disadvantage of social media marketing? So there can be there are a lot of advantages, but there can be disadvantages as well. So let's look at how this is explained. So social media risks. So there are 4 answers given. Disadvantage of social media marketing: target specific audience, a persuasive tool for brand engagement, disclosure of confidential information, cost effective marketing tool to promote the corporate brand. So A, B and D are mostly advantages, and confidential information being disclosed is one of the disadvantage. So 4 main risks from social media is that damage to brand reputation, disclosure or confidential information disclosure, corporate identity theft, legal, regulatory and compliance violations can happen because of this online social media. So answer C is the correct answer. Question number 46. What are the components of basic viral marketing? Now let's see what is viral marketing. So in chapter 10, mobile and social media marketing chapter, viral marketing is explained. So it says what is viral marketing, and this is a way of delivering content to as wide an audience base as possible. As a virus, this has to be sent to everyone as possible, so even viral marketing may go global. So some content which is of interest of lot of people, sometimes this content will be viewed by or consumed by people in many other countries as well. So once a message is released, is it impossible to control who sees it. So when you release a message or a post or an image into social media, sometimes more than you think, even hundreds and thousands of people might watch it, or they might use it, and they can even forward it to anyone they like. So it's not possible to understand how many people will see this. So companies can use this approach to market or promote, to make awareness about certain things in their organization. So there are three core components in viral marketing activity. The messenger is there. This is the organization or the idea, and then this is the message itself, and this is the environment where this applies. So it is clearly known as given as the message is given as the virus. So the message itself, the content itself, has to be really interesting, or maybe people should be curious to know about that. And then the environment means for where or to whom you are going to release this, and you can see. So at the moment, based on the current statistics, these are the type of content where people have concentrated on. So you can see some of the content which are relating to joy, amusement, like laughter, like funny content. So depending on what type of content you are communicating, that also will be having different effects onto how viral marketing can happen. So in the answers given, it's the messenger, the message, and the environment, which are the basic components in viral marketing. Question number 47. Identify a variable that could influence the online purchaser's behavior. So there are 4 answer points given. Meteorological information, conditions of the online environment, browsing speed of the search engine, mental state of the purchaser. So let's look at how this is explained. So difference in buyer behavior. So business and the consumer purchasers, there is a difference. Online purchaser behavior is complicated by special conditions of the online environment. So it explains here the online environment, there can be different conditions which are affecting the buyers. So conditions of the online environment can define sometimes how an online person who purchase might be different. So online environment may have different conditions. So this can affect how buyers are behaving in the online environment. So the answer is answer B. And having other information, and how speed the browsing, the search engine and all that, and whether the person is married or not, cannot be considered as a variable for online purchasing behavior. So depending on how the online environment is configured, buying behavior will change, because some online environment will be easy to use, some will be confusing. So things like that will affect the buying behavior. Question number 48. A business may require content marketing to assist in, these are the 4 items given. A business may require content marketing to assist in blogging, speechcraft programs, emerging markets, and magazines. So a business may require content marketing to assist in. So let's look at how this is explained. So different types of content marketing that can be utilized by the organization. So there are explanations given. First one is blogging, which is a very useful tool for organizations where they can have their content written in a nice manner, and this can be done quickly as well, and this can be a long or a short post with other information, and videos, infographics, case studies and white papers, ebooks, things like that also is possible. So one of the items are blogging. So you can see content marketing will assist in blogging, and it will also assist in other different types of content marketing. So the answer is answer A. Question number 49. What are the content marketing business models? So for that one, we'll see how content marketing business model. There are 4 types of models: performer, platform, player, and processor. Okay, and you can see in this diagram they have allocated these 4 types: performer, platform, player, and processor. So the content is considered in different methodologies, right? Different ways is being considered here. So performer is about content as central of excellence. Player, content as a contributor. Platform, content as integrated business, and processor, content as service. So if you look at content marketing business models, these are the 4 types of business models the content marketing will have. So the answer is answer A. And question number 50. What is the content marketing principle stipulated here? So there are several options given. So if you really look at in terms of content marketing principles, stop defects to removing variation, include UX and visual elements, base decisions on data, not opinions, encourage mutual respect and teamwork. So among them, there are only one answer. Principle 4, it says include user experience, we call it UX, and visual elements, and this was suggested by sumo.com, which is one of the 5 principles it has suggested. And if we have a look at the other ones, first thing is to have a goal. What's the first principle? Answer a question or solve a problem. That's the second principle. Go deep and narrow rather than wide and shallow, right? So talk about 1 or 2 things, not many things, but talk about it into the deep, and give a good user experience and appealing content, and create something which is timeless, where it will also be applicable in future as well. So each of these principles are clearly designed and discussed. So out of the given answers, answer B is the correct answer.